Hello guys, welcome to the Trading Parrot. I want to talk about everything that's going on that is pointing towards a potential all-time high coming in during this week. But since this channel we cover unbiased information, I'm also going to show you what could be pulling us back down in the short term. I want to talk about that, the levels we need to protect, where is the liquidity, and there is a huge signal telling us strongly that the potential for that all-time high is highest than ever. Guys, if this is the type of content that you want to watch, make sure that you are subscribed to the channel, hit that notification bell so you get notified every time I put out one of these videos. And if you feel like supporting the channel, watch this video until the very end. And do not go anywhere without leaving a comment down below. Those two things are telling the YouTube algorithm that this content is worth watching by more people. And it has been key for the channel to continue growing in the way it's doing. So thanks so much for that. Let's start with the monthly chart. You can see 1, 2, 3, 4, 5 months of sideways consolidation right above the highest close from the previous high. That is bullish. What we need to do, of course, is we need to put a new high. That will clear all the doubts and smash all the bears. The interest over time, it's at 24, and I'm really surprised. After having watched the speech of Trump during the Bitcoin conference on Saturday, I was expecting to see a lot more retail coming in. And don't get me wrong, seeing that this is still at 24 and we are touching the ceiling, knocking the doors for a new all-time high, and seeing the number of retail still staying at 24, when the previous all-time high we went to 53, and we're still far from outshining the highest level of interest over time, which was in 2021, it means that we are still early. Blow-off tops on Bitcoin occur when all retail are all in, ready to get wrecked. Before that, you can have corrections, but typically not the end of a bull market. And before we go with all the bullish technicals that I want to show you, including that signal, that's one of the strongest signals telling us that there is continuation to the upside, I want to stay level-headed, and I'm going to show you the CME gaps that we are leaving behind in case we saw a rejection. I remind you that we are below resistance, we are knocking on heaven's door, but as a trader, I'm always prepared for a potential rejection. And if there's any argument to tell us that we could come lower for a pullback, is these CME gaps that have very high accuracy, predicting that the price needs to close the gaps left by CME when the market is offline. For example, on Sunday at midnight, CME closed at 68.8K, meaning that the price is high likely going to want to come and take the liquidity left behind over the weekend. So this is the highest likely move for the price to come and grab that liquidity. This one we don't have to take care anymore because this was formed in the previous weekend and is already taken, as you can see. But on Thursday at midnight, we also left a gap right here. Pretty annoying, but it's the truth. We had a gap from 65.8 to 66.3. And a friendly reminder that we still have a gap in the low 60s. This spans from 57.8 to 61K. Some gaps take a long time to get filled. The vast majority get filled, and a very small number of gaps are still outstanding from a long time ago. For example, we have here one at 47.9. Personally, I have huge respect for the CME gaps. I post them religiously, all of them on my Twitter, typically on Monday, and we follow up with them throughout the week. Make sure that you're following me on Twitter. My handle is Trading Parrot. And yes, guys, after this descending broadening wedge on the 4-hour, we have this magnificent breakout. The CPR monthly play a crucial role to hold the price in here as support, and now we are approaching the first resistance at 70.3K. We're very close to get there, and the order block with major resistance starts at 71K. We're going to look into the liquidity around that area. I think there is a huge incentive for the price to come after all those shorts and trigger a massive short squeeze. You can see that this is a technical V recovery. And after crashing 26%, we gave you a buy signal pretty much a 55K. That was the first breakout that we had. The second breakout that was also posted on Twitter was at 65K. That took us to 68. And the last and final breakout that was also posted on Twitter was at 64, bouncing on the CPR and heading towards the top of the range. We broke above that and we continue to 70K. Now, going on the daily, you can see how important is where we are in the price from so many different angles. Number one, we are at the top of the range with a high likelihood of breaking above that range. From the perspective of the volume profile, number one, and from the perspective of the trend line that has been really strong in terms of rejecting the price. So all eyes open on a rejection here. We can afford a rejection, yes, but every rejection that we see here needs to have a small impact. We cannot see a rejection that takes the previous low, or even worse, go below the trend line that we already recovered. That signals for weakness and for further sideways or bearish moves. Over the weekend as well, we said that the line on the sand for the Trump pump was 66.3. In practice, we held very well 67, and we say that we needed to put a new high. On this candle here, there was indecision. We went above it, back below it, but we defended very well that 66.3, and that's how we managed to take this high and put a new high. So far, we are protecting really well the bull market support band. We are in the process of building a weekly candle above the previous one. This potentially could be the fourth week with a green candle. The third candle closed in green, but it's a very small body. I cannot complain. We went all the way from 53K to 68K. We were closing on Sunday, chilling just there. That was really bullish. So it seems to be that so far we have higher likelihood to see a breakout above the megaphone pattern. But don't get caught. I will never long below a resistance. That is mental. That's an area of high risk. There can be a rejection right there. Whether the rejection takes you back to the bull market support band and it holds there, no one knows. High quality entry is usually on a retest on low time frames right above the megaphone pattern with good signals telling us that this is not a liquidity graph. Remember that the price can be above this on the daily and then come back here and re-enter the megaphone pattern. This is a weekly chart, and unfortunately we need to wait until Sunday close, next Sunday, to see if we are still above the megaphone pattern when the candle closes. Before that, anything can happen. Liquidity graph and further downside, sideways, anything. Nothing is confirmed. And that's a bit frustrating because if we enter into the area where we trigger the short squeeze, I'm expecting as well the movements to be really impulsive, whether to the upside or the downside. And if we end up going to the upside, we might see most of the movement happening in front of our face very fast. If you're building a position like I've been doing, I rather doing it at the bottom each time we touch the megaphone pattern there. This is a conservative entry, but you really need to be paying attention to lower time frames to see whether we are confirming that this is turning into support. The hash ribbons after the buy signal from the previous week has the mouth wide open, almost as open as it was when it was in the most bearish area. So this looks to me really healthy, confirming that we shouldn't be expecting another capitulation right after. That will be extremely weird. A second capitulation after a buy typically occurs when it opens the mouth and immediately after it closes it back again, turning into a fake out. It has happened 2 or 3 times in whole history, so less than 1% of the time, and it has never happened that you get a fake out after opening the mouth so widely coming from a buy signal. And we close the weekly fulfilling all my wishes. Number one, we close above the support. You can see we ended up being above 67. I believe we were saying we need to be above 66.8, but since the price is moving, the target also moved slightly higher. We are above the support right now. If we are able to hold this week, it's very likely that we are gonna go to our target of 79. In terms of the RSI, we got the breakout, but pointing sideways. That is a mild breakout. It's not a terrible one. A terrible one will have been if we are above it but pointing down. We started now the week, and in this live candle is pointing up. So you don't get everything that you want, you get what you get. But we have to give credit to the pattern because we managed to never go below 40, number one. We have a V recovery, which is extremely bullish. We have a higher close than the breakout. Sure, we tested resistance, we went above it, we closed sideways, pretty much thanks to the Trump pump, because before the Trump pump on Friday and Thursday, we were back below support. So now we are in alignment with the stochastic RSI on our way to the top of the range. If we had any chances to do an all-time high, it is now or never. Let's look at the liquidity to see what is attracting the price. Right after looking at the liquidity, I'm gonna give you that huge buy signal that has me really in a good mood today, Monday. And I hope that after watching that information, you also feel that all-time high percentage of probability kicking in, lifting everyone's spirit. We are on the 4-hour, we are seeing the liquidity from trading different websites. There's a discount with a link in the description. This information is live. You can even use it in the 1 second. But let's see, on the 4-hour, we have liquidity. This liquidity has been attracting the price right after taking the one at 50 something. The whales started pushing the price higher, chasing that liquidity here, which is mild relative to the one we have at 50s. But at this point, the open interest will have already reset in the 15 billion level, and they were just saying enough. Now we need to go higher. We took all the liquidity from the shorts, and now they are going for this one here. At least that is what it appears they're trying to do. And in here, there is enough up until 76K, and I will expect that every time we hit that liquidity, we are gonna see some pullbacks. Look at the effect of hitting this level of 67. There is a rejection. The force closed liquidation levels tend to bounce the price, so expect here big bounces, big moves, but at the same time, the whales are going to consume all the shorts if we get to those levels, and they're gonna feast in liquidity. Although there are going to be rejections to the downside, I will expect a short squeeze snowball effect to the upside to potentially trigger this week. Let's look at the order book. We have an order at 67K here, which is the most significant bid in terms of ask. Many days ago, this ask liquidity at 72K was pulled. There is still a little bit left over with 400, but way less than the 1.1K that was there before. You can see on the monthly how we went straight for this, and even though it seems that there is nothing left on the top end, that is not accurate, because if we look at the 1-year time frame, these are the two levels. We got 74K and 76K. Worth mentioning that 51K still has loads of liquidity. Guys, here it is one of the biggest signal that I'm seeing right now. Of course, this is not confirmed. This is a weekly time frame chart, but you can see that we are putting an all-time high in aggregated open interest across all the exchanges. And this is mental, crazy. You're witnessing history. Before Bitcoin takes a new range, Bitcoin first puts high in open interest. Let me show you how. For example, we were constrained in this area of 44 to 48K, right? This candle here approach and close at 48K, right below the resistance from this week that was located almost at 49K. But if we look at this green candle in the open interest, you're going to notice one thing. This candle in the open interest is closing higher than the highest open interest that that we have in this range. And that is because the open interest reflects all the positions that are opened, and that high volume of positions open from derivatives tend to lead the way towards a continuation and a smash of the shorts. And right now we are having a very similar thing. We have a W pattern on the open interest with a massive candle of breakout, not confirmed, but telling us that it's very likely that what we are gonna see is the price following up with this first move of the open interest. These are people on derivatives preparing for a new range of the open interest. In a similar way, when we see these ranges being built, potentially taking us to a new price discovery, defining a new range for the open interest somewhere around here, with new all-time highs to come in the price as well. Not confirmed, not a forecast, but a high likelihood scenario. I still want to see the deposits to cool off big. I remind you that there are two hypotheses I have about this excessive amount of deposits. My hypothesis number one is that all the volume from empty GOX large holders is still sitting in exchanges because those people are not really paying much attention. Maybe they haven't had time to withdraw it. Who knows? But that is keeping these numbers high. In my opinion, this needs to go back down, confirming that they are going to hold for a little bit longer. It's never a nice thing to see so many deposits right before an all-time high, because that can lead to big corrections like this one here. So it's a very tricky situation. It's very difficult to tell whether we can afford to have all these deposits right there and survive it. For me, it's a risk. And hopefully this open interest is going to close the week in here, signaling that the longs are still in control and they're going to take us to a new range, and we are not going to end up with just another week pointing above this resistance of the open interest and with a subsequential correction with over 10K going to the downside. We do not want that. But the biggest takeaway from this video is that if we ever had in this range an opportunity to put an all-time high, it is right now. Is it guaranteed? No, nothing is. Guys, I'm hosting a 500 USDT position airdrop on Bybit. You trade with 100 and you receive additional 500 to trade. The link is in the description with all the instructions on how to do that. I also have a referral link if you haven't signed up on Bybit. Using that referral, you can unlock up to 30,000 in rewards. If you use your Bybit UID in my Discord server, in the channel Bybit Perks, you can claim 70% discount on any of the Trading Parrot subscriptions. With these subscriptions, you can get access not just to a vast library of power tools, Pine scripts that are going to help you to navigate the market much better and automate your trading with bots. There are hundreds and hundreds of indicators. I strongly encourage you to pay a visit to thetradingparrot.com to see by yourself all the different things that we are offering. And even if you're not ready for that, just join my Discord server. Let's have a chat about trading bots, exchange ideas. You can browse all the strategies for free. Many of them are free to copy. So I'll see you there. Bye bye.